Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, investors are buying houses like crazy.
They are.
We're going to talk about it. This is from an article, Redfin article. It's from Redfin blog. They have all the data. Investors bought 26% of the country's most affordable homes in the fourth quarter, the highest share on record. Let's first talk about what is going on that would make investors want to purchase homes right now at such a high rate. Because home prices are, in theory, the highest they've ever been, right? They're the highest they've ever been. Why are investors out there buying houses at a greater rate than they've ever bought before?
A couple of reasons. First of all, there is insufficient inventory. So investors understand supply and demand. So I think that they figure this is an opportunity. There's a lot of upside maybe as the shortage of homes continues. I think another reason is because inflation has been going on, so they're looking for somewhere to park cash. It's become clear and apparent to everyone that real estate is its own investment class, and it may be a good idea to be part of a lot of people's investment portfolio.
Okay.
So lots of different reasons going on. I think one of the reasons is because I think they've been sitting on the sidelines for a while. Like I said before, a lot of people have kind of put their lives on hold for a while. So this is another aspect of that.
Okay, I'm gonna throw this chart up. We'll talk while you're looking at this chart. Okay, this is the price tier of three different price ranges. In the orange is the low price, so let's call it the bottom third of the market. Mid-price is the green, that sort of pale green. And then high price is the blue. I think what surprises me is that 14% of investors of the purchases in the mid-price were, meaning if there were 100 homes sold in the middle of the market, 86 were owner occupants, 14 were investors, okay? But in the high price, so the top third of the market, if there were 100 homes sold, 16 were bought by investors, which is surprising because the investors are playing. I would expect to see these swapped. I definitely am not surprised to see 26% of all of the bottom third of the homes, the lower price homes, all purchased by investors.
And I'm a little taken aback like you are as far as in the higher price points, what's making investors play in those price points.
Okay.
I'm really not clear on that because obviously those homes, they're expensive and I don't really see the cash flow working out that well. So I wonder how these numbers were calculated because I question whether these are true investors the way we think of them, where these homes are specifically purchased to be rented out versus somebody who's maybe buying a second home and that sort of thing. So I kind of question that.
Yeah, I don't know how they get their data. Anecdotally, though, you've put 3 houses under contract this week with just an investor, like investors buying houses.
Yes.
So investors are buying houses.
Yes.
And so this isn't data that just made up. I mean, this Redfin's got national data, but we can back this up with anecdotal. Like we have investors. We actually have more investor purchasers right now than actual like home buyer purchasers right now.
That's correct. Yes.
Yeah. That, like we're not saying in Vegas, we're about us, like what we're dealing with,
right? Which
is actually surprising that there's so many investors. I think.
Well, I think it's part of it. It's just cyclical. I think these are people who we've done business with before, and they purchased properties from us before, and now they've accumulated cash again, and they're ready to go again.
If you go, this chart goes all the way back to 2000. I think a lot of people would have expected to see a huge bump around 2005, 6, 7, 8. But it wasn't. It looks like pretty normal. It looks like, a pretty normal trend of investors buying more. So back in 2000, only 10% of all homes in the low price range were purchased by investors. It was mostly owner occupants. Mm-hmm. Now you could see where this is going, how investors, now this is not all huge hedge funds.
No, these are mom and pop investors. These are people who, like I said, they're making real estate part of their overall portfolio. So maybe they have so much in stock, so much in bonds, and so much in real estate. Yeah. So previously people had their real estate as far as their primary residence, and maybe they had a second home, but that was it. They didn't have a portfolio of rental properties, but more people, as they're accumulating cash, are deciding to diversify. And where else do you diversify? You diversify in things that you know and understand, which is homes. Because remember, most of us are stuck as far as our 401k plans or our IRAs or our SEPs or Roths or whatever. We're stuck basically between stocks and bonds, right? And maybe money markets, but that's it.
Yeah.
There's really not an easy avenue for us to invest in other things. Yes, I do recognize that we can, purchase homes within our 401ks and that sort of thing for investments, but that's a little more difficult. So I think people are saying, hey, I've got enough of my money in the market, so to speak. Now let's take what savings I have and invest it in a different way. And a lot of people are choosing that different way to be in single-family homes.
Here's a quote from the article. Investors are drawn to affordable homes for the same reason as other home buyers. Mm-hmm. They cost less, meaning they cost less than more expensive homes, mm-hmm. which is especially attractive when home prices and borrowing costs remain elevated. And when housing affordability is this strained, there could be more potential for value increases in the lower tier, meaning more potential for building equity. I think the signal for me mm-hmm. is that if interest rates are high and home prices are still going up, because mm-hmm. we were told 40-50% home crash, home prices would tank when interest rates went up, and they didn't. The home prices kept going up. Mm-hmm. So I think this is a signal to investors: get as many bottom third tier homes as you can get your hands on, because what's happened is a lot of people are like everyone's complaining about affordability, but remember, it's only unaffordable. Homes are only unaffordable to people if you're looking strictly at a monthly payment, mm-hmm. Right? Because the home price of the home is the price of the home, whether interest rates are 30% or 1%. Mm-hmm. If the home is $400,000, it's $400,000. So I think there's this growing sentiment that if interest rates get back down to the 4 or 5% for a mortgage loan, under 5 for sure, this thing takes off again. Mm-hmm. I think people flood back in to become owner occupants and get out of being a renter, and that just pushed up home. So they're just like, this is a safe bet. The other thing too is we just did this article. Rents are up 6% mm-hmm. year over year, right. And you might say, Todd, 6%, that's blah blah blah. But yeah, but it's 6%. But remember, if you get 6% return every year, what if your rent's already giving you a 6 or 7% return, and then every year you're adding a 6 or 7% onto that? That starts to scale pretty well, mm-hmm. right?
Right. So, depending on the market, rents might be flat or they might be down, but we're just looking at what's going on, in general. The other thing that I want to point out is, yes, I appreciate that the economic news hasn't been favorable for mortgage lending, and that mortgage rates are probably going to go up before they go down, and that they're going to stay elevated for longer than anybody envisioned. And we've been talking about that for a long time, and we appreciate all that. But I remember what I always say is that real estate is a long game, and that's what people purchasing real estate are looking at. They're looking at the long game, not, hey, can I flip this house in this many months or 2 years or something like that. I think people purchasing investment properties are purchasing them for the long run.
Yeah. Here's a chart. I thought this was interesting. This is the percentage of all investor purchases. Mm-hmm. So if you only looked at investor purchases, what percentage are single family, and then what percentage are condos, townhomes, and then multifamily. So all the way at the bottom is multifamily. It's a very small percent, actually. Townhouse also very small percent. Condo is relatively small, but it's predominantly, you could see it's long term going all the way back to 2000, about 70%. Mm-hmm. What is the advantage of single family? All of our rentals are single family. What's the advantage? Like, why do investors like single family homes versus townhomes, condos?
So a couple of reasons. First of all, they're easier to sell when you get ready to sell, right?
That's a big thing.
That's one of the big ones. The other thing is that a single family home tends to have a lower HOA than a townhome. Right. That's another nice advantage. And then the third reason is because they're easier to rent than a townhome because they have less restrictions. So for example, like maybe in a townhouse, there's a pet restriction or something like that. single family home, you're less likely to have pet restrictions. You're also more likely to have more garage space, more storage space. You're more likely to have a bigger yard and all that sort of thing. So again, it makes it easier to sell, less of an HOA, and easier to rent. All of those are pluses for an investor. So that's the reason why people tend to prefer single family homes.
When you sell it, almost all the time a single family home can qualify for FHA with sometimes minor modifications. A lot of times condo townhome can't if it's in an community where there are already too many investors. Sometimes they won't qualify. The community doesn't qualify. And I remember at the bottom of the market here, 90% of all condo communities in Vegas did not qualify for FHA. You had to, and you couldn't get a loan in there, so you really had to buy cash and you had to be an owner occupant. But you couldn't. I mean, you couldn't get a loan in any of these communities.
So the other reason, it kind of to your point, when you're in a townhome community, then sometimes it's the HOA that's a problem. So if the HOA doesn't have sufficient reserves, or if the HOA is defunct, that's another reason why you might have lending problems, or you might even have homeowners insurance problems. So that's another reason why attached homes are more problematic.
This next chart, so what in the article, and I'll put a link in the description so you can go play with this, they took like the top 50 or 100 markets in the US, the largest markets, and then they sorted them by these categories. So you see the metro area on the left, but then all these other things like the percent investor purchase year-over-year change, the total value of all homes, the median price, the percentage, and the purchased homes by investors year-over-year percent change. And then what I did was I just clicked on the market, like were the most investor homes purchased by market, right? So, and then I just screenshotted it. So this is what we have here. It does not surprise me to see Miami is number one. 31% of all homes, this is all homes in Miami, were purchased by, by investors. Jacksonville, Florida, doesn't surprise me. Anaheim, California, median price $1.25 million.
That surprises me.
25%.
Yeah, so Anaheim does surprise me because, I mean, that's pretty expensive, and I don't know what rents are, but I'm having a hard time believing that if you're financing that, you're going to do really well as far as being able to put any cash in your pocket.
Now, this honestly doesn't surprise me. San Diego, 25%, $915,000 is the median purchase price of homes bought by investors. But San Diego is a hot market. We looked down there. We looked at going down there and buying a house or maybe two. And it was super competitive. I mean, we were getting overbid by cash offers on homes over $915,000.
Right. Yeah, again, I'm kind of in the same scratching my head situation because it's like, well, okay, how much do you have to put down to be able to make that thing cash flow? And then what's your return on investment? So I do question that. I think a lot of these markets where they're kind of head scratchers, I wonder how many of them are second homes.
Well, I have an answer because I think I know the answer.
Okay.
Fifth doesn't surprise me. Vegas.
Yay!
23% of all homes, median purchase price is $390,000. That's perfect because that's the range we like to play in. We like to play in median and just below the median. Actually, the median purchase price in Vegas is like $450,000, $460,000. So this is where we like to be. We like to be below that halfway the market. Matter of fact, we just looked at buying one that's like in the $360,000, $370,000 range that we're evaluating. Maybe we're going to put an offer on it. Another one that's on this list, it looks like it's about number 9 or something. San Francisco, $1.8 million. Now, 21% of all homes bought by investors. I will say, because remember, we did about a year ago, maybe a year and a half ago, we looked at San Francisco, the city of, like, no kidding, San Francisco, because there were homes that were like $4 million a few years ago that you could get for $2.5 million. Now you're saying, but it's still $2.5 million. You're right, but could it be worth $4 million again? And could you how long would it take you to do that in the stock market? And plus you'd be getting some rent out of it maybe. I mean, there were some smoking deals in the city. Like in San Francisco, there was more homes available for purchase than I'd seen in a long time. Matter of fact, there was one area, it was like the Mission District, where there were these Victorian homes that were like 900,000 that had been 2 million.
Mm-hmm.
So they were basically half off. And I thought that was interesting. But another thing here is for Vegas, the total value of homes purchased in the fourth quarter by investors was $739 million. That was the total value of homes. So there's a lot of money out there. Remember, this is not all BlackRock and Invitation Homes and people like that, because they're certainly probably not buying $1.8 million homes in San Francisco.
Probably not.
Probably not. Where does this leave us, knowing that we've been hearing about the housing crash? It hasn't happened. Interest rates are probably going to stay high for at least 4 or 5 months, probably through this buying season. Mm-hmm. But the number of homes that are available for purchase are starting to drop now every month, and home prices are still going up. Mm-hmm. So where does that leave us, say, in the next 6 months?
So I'm not expecting a whole lot of change in the next 6 months, particularly since interest rates are not likely to go down substantially because of the different economic news that we've had. As far as the crash bros are concerned, they are right. So I'm going to say this right now. You heard it here. The crash bros are right.
They're absolutely right.
There will be a market correction. I completely agree with them. The question is when and off what number? So let me explain. Okay. Let's say if home prices are, let's say, $500,000 right now, and they go to 550, and then there's a 10% price correction. Okay.
So they go to 650 then, right? Because they go up 55,000.
So if we start at 500, okay, then they go up to 550, and there's a 10% price correction that takes us down to 495. Okay. So there was a $5,000 price correction. Big whoopee skippy.
Do you think they go down? I think they go up. I think they go up.
So
I think interest rates are going to go down before any other bad thing is going to happen that would harm housing.
Okay. So that's one scenario. The other scenario is that the price correction is going to be further down the road, and let's say the price correction is 10% off 600,000. So now you're at 540, and you're 2 years into this, so your home went up $40,000 in value, even after it went down 10%, because a few years down the road it's worth 600. So that's kind of what you have to play with. Is yes, will there be a price correction? Absolutely, but off what number? Today's number or a number in the future? If it's a number in the future when you've already had more appreciation, then chances are that your home will still be worth more after the price correction than it is today. Now, is that a guarantee? No, I don't have a crystal ball. But this is what you have to kind of think about as you're moving forward through this market and through any market. Yes, market's correct. Yes, they pull back, but off what number? People who are playing in the market today, what they see is they see low inventory, they see sufficient demand, if not elevated demand, and so they're thinking this is a good time to buy. Is it a good time to buy? I don't know. And I know that every market is different, and I know that every market is hyper-local, so it depends on the neighborhood, it depends on a lot of different things.
I predict people that don't even watch the video will put in the comments, you're saying it now is always a good time to buy. I didn't say that. Never said that.
And I just said the market was going to crash and correct.
The stock market is all-time high. I guarantee you there's some people going, maybe I will put this extra $400,000 or $500,000 and buy a rental. Mm-hmm. And not put it in the stock market.
Right.
Right. If you've got all your money in the stock market and you just came upon $400,000 or $500,000, maybe you go get a rental house.
Maybe you do.
Right.
Or maybe you put it in Apple or Google or Facebook or whatever.
NVIDIA.
There you go. NVIDIA. Whatever you choose, that's fine with us. Your money, your game. Leave us your real estate related comments. We appreciate them. Let us know if you have a hot topic for us to cover on the video. We appreciate the suggestions. Remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.